Detailed breakdown of how I came to the analysis yesterday for the atom3 short chart I posted late last night. Hopefully this will help you understand a little better. This might sound repetitive compared to previous videos I've posted, but the reason I want to harp on certain things that I do is because when you become a successful trader, you're not looking all over the place for different types of setups and different moves. What I do personally, and what a lot of really successful traders do, is they hone in on one specific strategy and they replicate that strategy based on the charts when they see it. That allows them to have a conviction of opening a trade in a certain direction because of the success rate of that strategy. So for me, my strategy has always been falling and rising wedges with bullish or bearish divergence. So you always want to find a divergence, and you map out your measured move, and then you set your stop loss, your targets, and then your entry signals. So we'll just start here because every single time I open a trade, it is all based upon what Bitcoin is doing at that time. So Bitcoin last night was in this rising wedge. I posted the Bitcoin chart about it being in the rising wedge right here before it had even broken out. So there was a chance that Bitcoin could have put in another higher high to fill in the next move up of this rising wedge. That more than likely would have stopped out this position, and then price action would have taken off in the opposite direction. So this could have ended up being the buy zone down here with a stop loss down here. Since we had bearish divergence, so that is when the price action is in one direction going to the upside while the indicators are showing downside momentum. So we had bearish divergence on the RSI. We also had the stochastic overbought. When this swings to the downside, you usually see it pulling the price action with it with momentum. And then finally, we had a MACD crossing down over the signal line with the move to the downside. So this being a 68% chance it breaks to the downside, we want to find the measured move of this specific rising wedge. So what we did was we found the measured move by pulling the open end bottom to top. This is for rising wedges. For falling wedges, you want to do top to bottom. But you pull that open measured move of the outside of the wedge, and you're going to want to place it wherever the breakout comes from. So if the breakout takes place here, your measured move will be somewhere down here. And look what happened. We had the breakdown, all of the indicators showing momentum to the downside, especially with the divergence. That's the major key, is finding divergence so you can nail these reversals. And we wicked down perfectly to this measured move. And because of that, that allowed the atom3 short setup to play out. Now, what a short chart is, it's just the regular chart flipped upside down. So this is nothing spectacular. It's not super complicated to find short setups, or at least understand the short charts. So this is the regular atom chart just flipped upside down. So we're just going to read it how it shows in the chart here, since even though this is going to the downside, this is showing upward momentum that we were able to capitalize on. So once again, finding the strategy and the same exact signals lining up on my checklist, I do the same thing every single time. What is this? This is a falling wedge. Falling wedges have a 68% chance of breaking to the upside. A rising wedge to the downside, 68% chance. So you know the probabilities are flipped based on the momentum of the wedge. So downside momentum with bullish momentum, or momentum on the indicator. So we had a bullish divergence on the MACD, we had bullish divergence on the RSI, and then we also at that point too as well had some oversold territory on the stochastic, which would allow for a swing to the upside. So when Bitcoin broke down and completed this measured move, this allowed the atom3 short chart that I posted to break out of the wedge, retest at this opening level, the buy zone that we opened at, and hit target 1, use it as support, and now we're somewhat pegged here. So what I recommend doing, once you're at your first target, you want to move your stop loss up somewhere below your first target. So that way, if you end up breaking down this level that is now support to the downside, at least you're stopped out in profit. Hopefully you've taken profits once your first target is hit. and then you can always re-enter with a larger position or buy back into the trade once you get a bounce of a resistance to support flip. So in this instance here, the measured move has been hit out of Bitcoin. So you have to expect that every corrective wave, there's an impulse wave, and in an impulsive wave, there's a corrective wave. It happens. This is how the price action moves on any standard chart. So anytime there's a move to the upside, you always have to anticipate where the move to the downside is going to take place and if it's going to be more significant than the upside move. In this case, it was a full-on reversal, and we were able to figure out based on probability, not by a crystal ball, not by guessing, but strictly based on probability, the odds were in our favor for this setup to play out if Bitcoin broke down. Since we had all our indicators showing green lights that this was going to break down with a higher chance based on the divergence and where the indicators were overbought at, we were able to get into this trade here in this buy zone, wick down. Obviously, this is a liquidity sweep. This is where they're trying to stop out people that are opening shorts. Wick down here below our buy zone, but didn't hit stop loss, and we ended up breaking out to the upside with massive momentum. This was a total gain as of right now. If we pull it from the bottom of our entry, let me do that real quick. Oh, sorry. We'll pull from bottom of entry all the way to the top. This is currently a 37% profit on this single trade. And it happened in just a few hours. Now this still has upside potential because the measured move of this rising or this falling wedge is right here at this target of 0.023. So we could see with a high probability this playing out to at least wick up to the measured move and hit the second target. If that happens, you want to close your position on this trade, and then we're going to want to reanalyze and see what Bitcoin's doing at that point. But we have to be patient and wait for more price action to print. If you guys have any questions on this, or you want me to analyze any specific charts that you guys are looking at, but this is what I do every single time. So when you see me post a falling wedge with divergence on the indicators, especially on the larger time frames, be expecting a more significant move. Obviously, where the divergence and the patterns are playing out, the larger the time frame, the more significant the move.